Today's topic focuses on the cost of homeownership in San Diego. So let's paint a scenario about these costs for homeownership in San Diego. You've finally picked out your dream neighborhood in San Diego, narrowed down a few mortgage lenders, and even reached out to a reputable real estate agent. The major question remains, how much money should you actually have set aside to not only acquire the house, but also to realistically maintain the home with all the costs that are going to go along with homeownership. My name is Brian of Trusted House Buyers, and thanks for tuning into this video today. Okay, let's start with the first order of business, the dreaded down payment. As we all know, the down payment is a percentage of the home price you pay at the closing of the home sale. Down payments can really range typically anywhere from 3% all the way to a whopping 20%, depending on your loan type and the home's sale price. Are you in a solid financial position to make this type of commitment? I do have to note that there are some programs for military personnel which I'm excluding in these examples. But now let's jump to the closing costs. Closing costs are the additional fees and charges for buying a home and closing on the mortgage. And many buyers do not realistically factor in these charges, which can make for a big surprise during the escrow process. These costs typically account for 3% to even 6% of the home's purchase price, depending on the specifics of your home sale. Closing costs usually include fees like applications, sometimes attorneys, credit reports, property appraisals, and many, many more. If that seems like a long list, don't hold your breath, because the list does continue. Closing costs may also include homeowner's insurance, private mortgage insurance, and a possible escrow deposit to cover the first few months of the property insurance and maybe even mortgage payments. It is very important to make sure you have calculated all of these costs into your home purchasing budget because they will definitely add up. So congratulations, you have purchased your dream home. Now you got to factor in the moving costs. The average cost to hire movers can range anywhere from $700 to $10,000 if you're moving across the country. You can save money, of course, by moving yourself with a local truck rental, or if you have a truck, but we all know what a frustrating and daunting process moving can be. We've all been there. So let's now move on to the mortgage payments. Your mortgage payment is set by your lender, and it can really vary widely depending on the home's purchase price, the mortgage rate, the loan type, and the mortgage term. Here are how mortgage payments really typically break down. The principal is the money that goes directly to the balance of your loan repayment. The interest, this is the money toward the amount your bank charges for the loan. There's taxes sometimes. Property taxes are held in escrow, and then they're going to be collected by the local government. And then also sometimes homeowner's insurance. This is the insurance that protects your home against damage and is often required by the lender. This is really a must. There's also mortgage insurance. This is the insurance that protects the bank if you cannot pay off your loan. So as though this list doesn't seem really long enough already, I want to put a particular emphasis on property taxes and insurance that can really be costly, especially here in sunny San Diego. Sunshine tax, right? Each state sets a real estate tax rate, and the assessment of your home and property will determine the final amount. When it comes to insurance, the location is going to be a factor, size, and condition of your home will play large factors into the price of this policy. So you've made it through the stressful purchase process and are now actually in the home. Is it really smooth sailing from this point on? Not always. First off, you'll need to budget for the many utilities that go into a well-working home. Some of these utilities include water, electricity, gas, and internet, just to name a few. This area is often underestimated, especially when upgrading to a bigger home. Secondly, one of the biggest costs of home ownership after purchasing your home are the many repairs that come along with it. Many homeowners have no idea how much they need to budget for their home repairs. Let's talk about something called the 1% rule. If you're using the 1% rule of thumb, you should budget at least 1% of the home purchase price for your maintenance expenses. For example, if you purchase a $250,000 home, you could budget a minimum of $2,500 for upkeep and repairs using this rule. But is that really enough? Doesn't seem like it, right? An alternative to the 1% rule is the square footage rule, which dictates putting away $1 per square foot of your home for annual repairs. Which one you choose should depend on really the age and condition of your house. So as you can see, there are many options to sift through when it comes to preparing for homeownership in San Diego. It is a decision that a potential homeowner should really not take lightly. Do some research so you can understand all of the costs associated with homeownership, and so you can make a really informed decision. If you are a homeowner and the rising cost of homeownership is simply becoming too much for you, trusted house buyers can offer you a cash offer, take your home as is, and close on your terms. For more information on the rising cost of homeownership in San Diego, and there are many, you can always call us at Trusted House Buyers by dialing 619-786-0973.